crude prices have come off their 9-month highs. Bleak economic data out of the US and Europe has cast a shadow on global appetite for crude. Brent continues to trade above that $120 mark as well on your screens there, and the NYMEX is also holding around that 105 mark in the markets. 106 is what we saw as a high being hit yesterday. For an outlook on crude prices, let's go across to Simon Wardle. He's Director of Global Oil at IHS Global Insight in London, and he joins us now. Simon, hi, welcome to the show. The crude prices are up at a 9-month highs on Iran supply concerns. How big is the Iran issue according to you?
Well, Iran has definitely been a big factor in pushing prices up since the beginning of the year. The fact that sanctions have been tightened by the U.S., that we've seen the EU moving to bar imports, that's definitely been a key factor over the past little while in pushing prices up. Just this past week, though, with Iran announcing they were going to stop exports to France and the UK, I think maybe had less of an impact on markets than some other factors that were going on. We saw, for example, China reducing the reserve requirements on banks, boosting lending, and some settlement in Greece, some signs of improvement in the EU. So I think those two factors in terms of increasing economic optimism, also probably playing into the price increase we've seen just over the past few days. The Iran factor may be a little less significant in the short term, but certainly it's there as a major driver in the medium term.
So looking at all the factors, Simon, that you just pointed out, what's your outlook on the Brent and NYMEX crude prices for the near term and for the rest of this quarter now?
Well, I mean, we think prices are going to stay at a fairly elevated level. They're $120 for Brent now. We think they might come down a little bit towards a month or so away, but they're going to remain fairly elevated. There is a risk, of course, as we start to get into this kind of price region and upwards of 120, 125, that we do start to do more damage to what is still a fragile global economy. So I think there is a limit to how high prices can go without another severe disruption, which of course you can't rule out. But all things being equal, no disruption actually occurring in the next few months, we think prices are probably nearing a peak and should come down a little bit. But because the market's this tight, because Iran's going to be an ongoing background price driver, we don't see prices coming down too far.